We are seeing really exciting developments in well-being, in insurances, in the kind of things that employers need to be considering when it comes to health and risk among their employee populations. And you and I have been talking about this, how this is impacting things like insurance and costs and risk for reward and benefit directors to think about. One very interesting area to think about is advanced therapy medicinal products. And what that means for employers. Could you perhaps tell us a little bit more about that and the kind of things that we need to be thinking about now?
Yeah, sure, Debbie. I think the key one I focus on, there's three main ones. The key one I focus on for today is stomatic cell therapies. The one that I imagine people will be more aware of is something called CAR-T. Let me just take a second to explain what CAR-T is. CAR-T is a new therapy which has incredible opportunity for patient groups. And in essence, it is taking the patient's blood and it is re-engineering their immune system. So you're taking that blood out of the patient, then through genetic therapy, you are changing the T cells in the patient's blood to get them to recognise and attack certain forms of cancer, put that back in their blood and let that work. It's currently licensed for a couple of areas, non-Hodgkin's lymphoma and then some childhood leukemias as well. The results as a third-line cancer treatment are quite incredible from the patient's perspective. Studies are showing up to 30% of patients at that stage are being cured of those diseases, and it's extending life beyond 1 year for another 20% of patients. So the impacts from the patient side are fantastic. This is a growing therapy licensed for those areas at the moment. We do believe that is likely to expand out over the years and probably cover some broader tumours as well. And this has implications from a health insurance perspective. And clients really need to think about that. We've now seen the first hospital licence for private CAR-T therapy. So the chances are, as clients come into their next renewal cycle, they're going to have to think about policy and procedure about whether they want to cover such treatments as they are today, but also as they expand out, and the cost implications. Now, the one thing I've not talked about is cost, and here's the kicker. So fantastic treatments, great for patient groups. The current downside for the bill payer is we are looking at treatments around £500,000 at the moment. Now, the likelihood to get one of those is still limited, but now is the time as you come into your next renewal cycle where clients have got to think about what is their policy and then how are they going to fund these treatments. So from a policy perspective, it's okay, what do we want to do? And this is similar to the debate we had a number of years ago around cancer drugs, monoclonal antibodies, so Herceptin, Avastin. Clients went through the same decision-making process there. Then we were talking about £10,000, £20,000 as course of treatment, more likely to see those, but the implication from a financial perspective was less severe. Here, very unlikely to see one, but if you do, it could really put a hit in your medical fund. Now, first of all, it's about policy. What do I do? Are we going to include? Are we going to exclude? Are we only going to include if not available in the national health? So that whole process about what is our corporate policy going forward, but then the cost implications. If you're fully insured at the moment, because they only cover a couple of areas which I've referred to, the cost implications are probably 1-2% on your medical renewal on top of standard medical inflation. But if you're a larger corporate, you self-fund through healthcare trust and you've got stop loss, you really need to think about your stop loss policy in terms of that sort of money is going to blow a specific stop loss out of the water. So what's your stop loss strategy? Have you got some opportunities to be cute and really tie into multi-year deals, but think about what attachment level you want that stop loss policy to be. So fantastic advances in therapy. The corporate has to think about, okay, how do we apply that to our healthcare policy? What's our strategy, and are we comfortable with the funding implications?
So a lot to think about because of these new therapies and medical advances coming down the line.
Yep.
But what we're also seeing, and research that you've put out at Willis Towers Watson, showing a greater emphasis coming from employers and employees on diversity and inclusion, for example, and employers looking more closely, and insurers, at the insurance products they've got available and whether those are truly inclusive or whether they're exclusions that's unintended over time, but we've realised are against certain population groups. And it would be interesting to hear your view of how they review that, what they should be looking for. Again, what are the implications of being truly diverse and inclusive when it comes to insurance?
Sure, it's definitely a hot topic, Debbie. I mean, our 2019 benefit trend survey's just been released. This is where we've asked a number of corporates about their benefit strategy for the next few years ahead. Over 60% of respondents said making changes to their benefit policies to align with diversity and inclusion was a key agenda for them. So it's a hot topic, it's out there, and you can understand why, especially in broader conversations around gender pay gap issues, etc. So what can benefits do to play into that diversity and inclusion space? And we've seen over the years, or recent years, some developments. We've seen some large corporates make changes to their healthcare plan around areas like gender dysphoria and what's covered there. So maybe not the treatment, but certainly the psychological support before and after surgery, and also possibly around some of the hormone therapy treatment that's required there. So those were sort of early changes we saw in healthcare plans, and they're still coming through. They come through from the largest corporates first in those sectors that are normally the first adopters, so financial services, media, tech. That's where we see the changes first, and then they come through the rest of the market. So we're already there, and those are starting to move. And again, clients need to think about policy and funding implications, especially as at the moment, National Health Service is the centre of excellence for such surgery, but we imagine we will start to see private clinics expand out into that, and therefore more implications from a surgery perspective into healthcare, more opportunities if clients want to cover such issues. Mm-hmm. The other area that's interesting and is developing quite quickly now is family-friendly policies, as I'll call them. And one in particular there is the opportunity to now start thinking about, do we want to provide not just cover, but do we want to provide financial support, physical support and emotional support for IVF, so fertility treatment. And that is a very key area, and we're starting to see interest there and product development. There's clinical surveys out there that show that as someone is going through IVF, I think in 85% of cases, it's recognised that it has a negative impact on their work, their focus at that time. And the same stats show that a significant proportion, 15-16% of employees actually leave their employer while they're going through that process. And others also reduce hours as well. So there's big impacts at that time. So this isn't just about throwing money at the problem, it's providing education and support to employees as they go through such treatment cycles. And we're seeing developments in that space. One, from a financial perspective, we're aware of a product that is coming to market shortly, which will provide financial support from an insurance perspective. So you can ensure the success rate of going through IVF and having a successful outcome to that, but also really utilising digital apps around providing that education and support, able to purchase medicines online. Everything is all in one place. And that education also includes calculators based on AI, where off a few key factors and variables, we can predict now the likelihood of how many cycles someone is likely to need in order to have a successful outcome. So having everything in one place and providing that emotional support as well as the financial support is another area which aligns quite nicely with the diversity and inclusion agenda.
I'm sure that will be really popular. And I want to pick up, you started talking there about apps and data and AI. So yes, another area within health is the huge challenge that non-communicable diseases present for employers.
Yep.
And I know you've got a number of ideas about how you use health tools and data to mitigate some of the impacts, for example, on cancer or heart disease. Can you explain perhaps how employers might be using those tools
Sure.
and apps more effectively to help them mitigate those problems in the workplace?
Yeah, let's just define what we mean by non-communicable diseases. You've mentioned a couple there. So really we're talking around about cancer, cardiac conditions, mental health, chronic respiratory diseases as well. And there we're saying, look, the majority of disability and absence comes through those conditions. And there's a number of well-known risk factors associated with that. So tobacco use, alcohol, inactivity, diet, and also poor air quality. And we're saying, can the number of digital health apps that are out there now make a difference if used correctly to basically personalise healthcare and make some of those changes so people actually change their behaviour slightly to improve those risk factors to mitigate the chance of getting one of those diseases. So one of the areas might be mental health. We're seeing a number of clinical backed applications coming out where there is interest from corporates in using those applications to help improve the mental health of their workforce. So that's an example in point of use of that digital application. And I think the fact that it's personalised. It's not just generic information. People don't react well historically to generic information. So it's back to utilising behavioural economics, those little nudges that help us change behaviour over time and help improve those risk factors. So that's one particular area. But I think as more and more health data becomes available through these digital initiatives, I think corporates have a great opportunity to do some deep dive claims analytics and start looking at the vast amount of data that will become available and look at how they can avoid claims, how they can control claims cost, and how in some cases they can transfer those claims to improve the health of the workforce, but also mitigate the healthcare spend. So we recognise that being proactive in this space is better than being reactive. A lot of policies that we've had out there from a benefits perspective are about reacting to an illness or a disease at the time. I think we're going to see a shift with digital health transformation towards that preventative space to recognise that actually we can all do a lot more to manage ours and our workforce's employee health, and we can utilise these digital initiatives to do so. And I think that's an exciting opportunity that employers have.
Great opportunity, but also it sounds like those that are responsible for purchasing health insurances and health benefits really need to get on the front foot and look at these changes because they're coming quickly now. We've talked about them for a while, but now you've got to be thinking differently to mitigate these risks that are going to affect your population and your costs as an employer, as a corporate, as well as your premium costs in the next few years. So thank you very much for giving us some of those insights of just some of the things that people need to be thinking about now going into 2020 to avoid problems in the future.
Okay, thank you.